All right, guys. So this is HIMS. We're going to go over an earning strategy, and we're going to use ChatGPT for the earning strategy. So with the earning strategy, what we want to do is we want to see if we can find a pattern. I'm a pattern recognition trader. I'm a contrarian. So I do not want to do what everybody else does. So typically when there's good earnings, you have a lot of people want to come in and buy, but you probably are liquidity for someone who wants to sell. So price may dump on you. Then you have people who have maybe bad earnings. Then what happens? Everybody wants to sell, but then if everybody's selling, it gives an opportunity, a liquidity for someone who wants to buy. So you really want to see how this works. All right. So you see down here we have these these E's. These are earnings. All right. So I have the paid version to be able to see this on my particular chart. So you got the earnings and your revenue. All right. So you have your earnings right here, and then you have your revenue down here. All right, and so what I did was I copied. All right, I took copied the image, and I put it in ChatGPT. If you don't understand how to do that, you go and look at this video right here. I put it up there. How I trained ChatGPT to trade like a 7-figure Wall Street pro. All right, so here we go. So I pasted in here based on this 6-hour chart and the earnings signals at the bottom, which green means positive earnings and red negative. Can you detect the pattern price of doing the opposite of what earnings is, and how often? Go at least 10 post earnings. Go at least 10 bars post earnings to help determine if price has a pattern. All right, here we go. So on one of them, negative earnings, but then price rose afterwards. Conclusion, it did the opposite. Next green, E. Positive earnings, what happened? Price dropped. Conclusion, it did the opposite. Remember what I told you? Boom. Here we go. I'm not going to go through all this, but I'm going to go on down here to the summary. Earnings red. Expected reaction. Who is the expected reaction? Who is that? Retail. What happened? It went up. Match. Green. Earnings. Expected to go up. It went down. All right, look at these right here. Okay, but it was a slight drop. Then it rallied and went up. Out of 10 earnings, 8, so 80% show that price does the opposite of what earnings suggests within the 10 bars of the 60 hours that I gave to do. So this suggests a contrary reaction pattern to the earnings of HIMS. Now I'm giving you guys this because I'm at the end. Right now, I'm trying something different. I want to get this out. It is what it is. But in reality, to be a true contrarian, you're not even supposed to reveal this. But it's okay because it's a lot more. It's multitudes of different strategies and things that are happening on the back end that I just don't talk about. But I'm showing you guys how. If you rock with me, if you seen this video, knock on wood, congratulations, good. Just use it. Do what you're supposed to. All right? So we clearly see. Now, what happened? HIMS had earnings recently. Okay? So they did it on Monday. So it's going to give them a green, even though, so the earnings part is the main thing they're really concerned about. It's because, they did an estimate of the 551, million, but they only reported 544 million. So they missed their mark by 6.83 million. Regardless, that's still somewhat pretty decent, but you still would get a green earnings rating for the most part. And then look what happened. We had earnings come out, and then yesterday, and then we had this drop. They trapped on somewhat of a good, and then it rolled over. Okay, can we go lower? There's a possibility. All right, but if you go back through and you start looking at some of these patterns and stuff, you'll start seeing how oftentimes it does the opposite. Okay. Now, instead of you just acting on just impulse to just going out and say, well, if it was positive, I'm just gonna go, the opposite. You don't have to do that. You can actually wait, and you can, for instance, if something was green, it's still the prevailing direction is bullish. So instead, you wait for a correction, and then you can get in and you can ride and you can go into the prevailing direction. All right, and so you'll see a multitude of times where this is shown up in let's say Google or something, right? Let's see what Google talking about. I mean, look at Google right here. In October, they had 88 billion reported. 86 was the estimate, and everything was solid. It was good, but look what happened. Like, look at the drops afterwards. That's all the people who come rushing in. Look right here. All right. Now this was a little off, but remember, it's still gonna get the green. But look, we fall off a cliff. All right. Look right here. Same thing. We're good, but then you fall off a cliff here. Like you see it now. You got one over here, the recent one, and then we finally we pulled down. Remember, this is a 6-hour chart, so it's a lot of price action in this. Now, every stock's not going to do that. Every stock is not going to do that. So that's why you have to run the historical analysis on it. And if you get an 80%, if you get anything, to me, if you get anything 60% and above, I think you can run the play. You can do it. All right. And guess what, guys? If it don't work, it don't work. Keep it moving. Nobody said this is going to be 100%, but it's a strategy. And you just work your system, you work your strategy. All right. So I just want to give y'all a little bit of that game. Y'all, you got to stick with it. You got to continue refining it. Some of you guys may start now looking at ChatGPT totally different and use it for things that you may have noticed, and you can get the edge on. All right. And help people. You can talk about it. We all want a big community. We all trying to be out here, eat and make it and whatnot. But I will say, in reality, in certain things you probably still want to keep to yourself. Now, if you got like an impeccable edge on something, you probably don't want the whole world knowing everything, because it can dilute it. But what I have been learning, especially from someone like Oliver Velez, he has said it plenty of times. It's like people used to be worried about him giving away for free his stuff, and he has said it like it don't matter. It's not going to affect it, because the vast majority of people just not going to use it and take advantage of it. It is what it is. Someone said the same thing with I think his name was Dennis with the turtles. All right. So yeah, it was Richard Dennis. All right, Richard Dennis, a commodities trader, stated, "I always say that you could publish my trading rules in the newspaper, no one would follow them." All right. So this statement highlighted the difference between understanding their trading strategy and successfully using it. Consistency, discipline, and confidence are important, particularly in challenging markets. All right. So if you guys don't know about him, you can read over here the Investopedia. All right, there's books written about him, but he was really successful in taking people who normally weren't traders at all, and they went on to make millions. All right, I think they made over 175. Yep, a combined 175 million in 5 years. All right, these people came from all different types of backgrounds, and he gave them a strategy. And all they had to do was stick with that strategy. Risk, reward, take profits, set stop losses, all of that, and boom. That's what they was able to do. But how is it that all of this stuff is free? It is all online, everything. And yet, most people can't be consistent. It's because it's all about the discipline, personal development, and getting out of that greed. So all I'm doing is just showing you guys there's multiple ways that you can approach this market and you can do things. Pick your market of choice. All right. I started out in stocks. I moved over into more crypto, and of course I was in forex trading and stuff like that. And I just feel real good. I just trade crypto futures really for the most part now. I do a couple of options every now and then and stuff, but I found my lane in trading wise. I like the crypto futures a lot. Investing, I like crypto a lot because there's a lot of upside potential. It's a new market, the things. But settle in, find something, but dominate. Find your niche, find your lane. Network with people, talk. Like, stop being shy. Back test your stuff. Hell, you can share, you can post it, and that's why I'm saying I'm not sitting up here trying to safeguard. Like, I got some type of hidden secret. Like, there's a lot of people who probably know what I know, but it ain't even about that. It's about who can regulate their emotions, who can stay locked in, and who can repeatedly do the same thing over and over again. Everybody knows how to make money. There's no secret in how to make money. People just don't have the resiliencies, the grit to keep going and do it. That's the thing. And sometimes that can't be taught. That's my rant for today. Hit the like button, subscribe. It's your boy E. White. I'm out.